Well, the flood of cash is pushing the value of the dollar down. So where can investors go? Our next guest says cryptocurrencies stand to benefit maybe even more than gold and silver. I am talking about none other than Eric Wade, editor of Crypto Capital. And Eric joins us now live. Eric, what have you seen happen in crypto since all this monetary and fiscal stimulus started flowing into the U.S. economy?
Something really interesting that we've actually been predicting for a while, but now we finally have proof of it, is that corporations and other traditionally large holders of cash are starting to replace some of their cash holdings with cryptocurrencies because they're thinking longer term. So you're even seeing public companies that have to maintain a cash balance just so they can do business, around the world. And they're starting to think that maybe holding some of that cash in cryptocurrencies makes more sense than holding cash because there's just so much cash sloshing around in the world right now.
And which cryptocurrencies are probably the best store of value in your estimation?
I guess that depends on how you define store of value. If you're thinking short term, then you would want to use a stable coin, something that's pegged to $1, and they're incredibly popular right now. But if you're thinking longer term, then the crypto of choice still turns out to be Bitcoin. It's entered a period where the long-term inflation is below 2% and will be for forever. So it's really picking up a lot of popularity as a store of value.
Yeah, I feel like one of the things we've seen so far this week has been increased stimulus for the world. So more dollars are going to be flooding the system, more euros. And on top of that, there's this big push for more investing in technology. These are both trends that should benefit cryptocurrencies, no?
Yes, absolutely. And one of the nice facets of cryptocurrencies is that it does take advantage of technology and kind of push technology forward. And it helps to answer a lot of times when people are starting to get introduced to cryptocurrencies, they say, well, is it a money or is it a technology? And your question kind of leads right into that, because the fact that you can have a technology that mimics a currency or a currency that has technology aspects of it fit together perfectly.
Yeah, and not to mention, another thing you've talked about too is the relative safety and security to be invested in this digital currency versus having paper currencies. I mean, that is an aspect I don't feel like people fully appreciate.
I agree with that. And at first, it can be a little bit of a learning curve for people and for corporations as well, and probably even governments, that it takes them a while to realize this is a different asset. It's got features and aspects of assets that we're familiar with, but unlike cash, it can be harder for people to understand it. But once they do, they realize, wow, it's easier to move, it's easier to keep track of, and it's got these facets that we just really appreciate. Transaction costs are very low, so I think that's why we're starting to see a lot of, like I said, traditional cash holders start to have some interest in it, including and up to central banks.
Yeah, and that's where I wanted to ask you about that, because the Bank for International Settlements and 7 central banks just published this report with requirements for them. And they want them actually not to replace cash and other forms of legal tender so that there isn't a harm to stability. What's the interplay there between what's being called these CBDCs, the central bank digital currencies, and things like Bitcoin?
Well, you have to keep in mind that one of the things they're afraid of is if consumers were to think that cash was going to be replaced or cash was going to be eliminated, that maybe consumers would all rush to withdraw their cash at the same time. Mm-hmm. So that's maybe one of the risks that they're afraid of, and they're trying to work their way around. So, of course, in the initial stage, they say, let's envision a world where like gold and dollars work side by side, or digital dollars like in your bank account or that you pay your credit card with, and real dollars work side by side. So let's kind of get that message out about central bank digital currencies, that they'll be side by side for a while, kind of roll out together.
So Eric, what are your thoughts on this dovetailing in with the whole digital payment trend we're seeing?
I agree. Digital payments are definitely picking up in popularity, and the idea of handing each other physical items being less popular during 2020 is certainly helping with that. And that also helps explain why stable coins, as I've mentioned before, that are pegged to, say, the dollar value or yen or even a euro value, they're picking up a lot in popularity as well, because people can pay for items with them just like you're paying with dollars or something like that. And if it's a crypto-backed technology, but it allows instantaneous payments using cryptos for anywhere in the world. So they're picking up in popularity side by side with like your Venmos and PayPals, et cetera.
Another thing that's really interesting about cryptos to me, it's something you've highlighted, is with the market right now, people are worried about being able to find yield plays. You've identified that in cryptocurrencies.
One of the things I really find interesting about yield in crypto is there's a few different sources, and some of them traditional investors might find to be pretty familiar, almost like banking of decades gone by, where you're familiar with the idea that if you make a deposit into a bank and then the bank lends out your currency, the bank collects interest on it and maybe pays you a little bit of that interest on your deposits. And that's happening in cryptos as well right now. So we're seeing people earn a yield based on providing liquidity with a technology called DeFi that allows you to provide liquidity to other traders. You can earn a pretty handsome yield on that. And there's been some pretty extreme examples where there's thousands of percent calculated out on a yearly basis, but almost none of those last for a year, because obviously anybody who's seeking yield would immediately pursue that. But we're starting to see a kind of a maturation in that, where people can deposit their cryptocurrencies and earn anywhere from 3, 5, 10, 20% yield on them. And if you're holding the cryptos anyway, that's on top of whatever gains you might have been making from the prices going up.
Do you have ideas about the influence of central bank motivated digital payment and how that's going to impact investing in cryptos?
Absolutely. And I think one of the points I try to make when we're looking at investment opportunities is you sometimes you think about, like, if two parties are making a transaction and someone facilitates that transaction, is there a fee? Part of your brain knows, well, these banks are making tons of profit. They have huge headquarters and they're raking in billions of dollars of profits. But we think of banking services sometimes as maybe free, right? Like, you don't think of sending money from one party to another party as necessarily a place that you could make money. But at the same time, with cryptocurrencies and cryptocurrency blockchain technologies, transactions are a lot cheaper. So I see this as maybe something that's attractive to central banks, where they're thinking, how can we use this new technology to lower costs and possibly save some of the profits for the people that are traditionally making a profit in this space? And I think there's a lot of growth for that in 2021. We're going to see a lot of move in that direction.
And to your point, it really creates a wider safety net that central banks can provide to say, we have a crash like we experienced with COVID. By doing things like this and saving this money, they have more money to lend to businesses, to individuals.
Bigger buffers.
Yes.
All right, Eric Wade, the editor of Crypto Capital there. Thank you so much for joining us with your thoughts there. If people want to get connected to Crypto Capital, you can hover on your screen now. We'll connect you. And of course, you can find more content just like this on YouTube, Facebook, Instagram, LinkedIn, and Twitter. That's all for now.